start at the far end, maybe. Name, company, that would be wonderful.
Hi, I'm Mike Mann. I'm Finance Director of Williams Trade Supplies Limited. We are the UK's largest independent plumbers merchant. So I feel like a complete fish out of water in this audience.
No, but to explain, you're sort of B2B, B2C. You're a funny mixture, aren't you?
We are. Our target customer is a sole trader or somebody employing probably fewer than 5 people. So it is technically B2B, but our Bs feel like Cs, if that's not a very bad thing
But a
to
lot
say.
of them do use commercial debit cards, you said.
Yes, that's why we started the journey with open banking generally, because we've seen somewhere in the region of 600% inflation in 4 years in our card fees, purely because our customers' preferred card type is a business debit card. So that's gone from a capped interchange of 0.2% at £1.50 cap, I think, to 1.4% uncapped. And if you think the average plumber is buying a boiler and some radiators at probably £1,200 a time, that adds up to quite a hike in card fees if they're paying on cards.
A great use case for something we're going to be talking about.
So my name's Mike Chambers. A real pleasure to be here talking about VRPs as a former custodian of Bax Direct Debits. I'm the former CEO of Bax. I'm currently a payments advisor and I publish the Payments Unpacked newsletter.
Hi, my name's Stephen Wright. I head up kind of market and reg engagement for NatWest Group regarding open finance.
Bank of APIs.
Hi, I'm James Hodgson. I'm the Chief Product Officer for NatWest Merchant Acquiring Business. That is Till by NatWest on the card side and Payit by NatWest, our proprietary PISP solution.
I'm going to start off with a really simple question at this stage. I think just for everyone in the audience, let's be clear in terms of what do we have today, both as what I'm going to call me-to-me VRPs, you know, where are we in the market today, and also on commercial VRP. So let's get it up front. What are the dates, or where are we exactly today in terms of what's happening? Because it's interesting, I was talking just now and I didn't realise a couple of the dates. So can someone just take us, the audience, through where are we today? Is that a simple question?
I'll go on the me-to-me dates and VRP. So basically, you've got the 6 largest retail banks in the UK are now live with sweeping. So that's me-to-me VRP. You've now got a handful of people.
But are all 6, someone told me earlier, only 2 of them have officially said they're live now.
According to the CMA,
Yeah.
all 6 are live.
All 6 are live.
Yeah. Whether all 6 are being used is a different question.
Okay.
But the APIs are live.
But that's
The CMA
so
has
it's not the
signed it
CMA
off.
9, that's a...
No, that's CMA 9. So 6 of the CMA 9.
But the other 3 haven't done it yet.
Other 3, so the Irish banks haven't done it yet.
When have they got to do it by?
That's a question for the CMA, not for me, because that's
I thought it
not-
was July. I thought the date, officially they had to have
might
it
well
ready.
be July.
Yeah? They're meant to, and this is the CMA grants them an exclusion. July, I thought they had to have it done by. Yeah?
So the 6 GB players are, though. And if you look at the me-to-me providers at the moment, you're seeing the kind of Wise, TrueLayer, Monzo I know are coming, are testing at the moment, etc. So it's those kind of sweeping into a Forex account, sweeping into secondary bank account, credit cards, lending, etc.
Just to be clear about that, me-to-me, therefore, me-to-me doesn't mean my account in my bank in another bank. It could be my account to an e-money account. It could be...
As long as it's in your name.
As long as it's in my name.
Yeah, you're the beneficiary.
And it's a transactional account, that's allowed.
Yeah. Yes.
Okay. Where are we now on commercial VRPs?
Shall I go? It's not mandated, so the broad CMA 9 is exploring it but hasn't yet deployed. NatWest is the only one that is live in the market and has been proactively engaging the PISPs, the range of PISPs that you would kind of talk about. It has signed contractual terms with a number of them to test them in the market. It is also trying to work with the other banks to get to a stage where we have a material percentage of the market enabled. You have a number of the PISPs that are now actively piloting the capability and testing it in live with customers.
All right. So, obviously, I'm looking at the merchant now. VRP commercial. Useful to you? Not useful? If so, why? Give us your view, because the next question I'm going to ask Mike is, why is this all taking so long? Because he told us he was an expert from BACS.
As far as we can see, VRP takes open banking payments into space for a merchant. Where you've got a fairly closed community of customers, so it's not like retail where you've got a lot of kind of random one-off footfall. We've got a lot of repeat customers. We have avoided using direct debit as a payment method because most of these customers' payments are very lumpy. They can be very large one month, very small the next. They're not. It's not a subscription model. But two things: to be able to offer a customer truly frictionless payments in our branches. So we're not talking about an e-commerce environment. This is a face-to-face in-branch environment. We could offer them something that is as close to walking out with the goods without paying as we could get whilst still getting paid. If customers prepared to sign a consent for I was going to say digital debit, I should say VRP, for us...
I like that idea, digital debit. That's not a bad idea, that. Giving away your marketing here.
If they're prepared to do that, I'm prepared to give them a higher credit limit because I'm in control of taking that payment off them. I'm prepared to give them longer to pay because, again, I'm in control of taking that payment. There'll be all sorts of other benefits we could give. Different payment schedules, an automatic alert when you approach your credit limit with us so that we would then say, by the way, we're not just alerting you to this, we'll also take a payment from you in the next 2 days to bring you back down. So it's becomes a very slick relationship tool for us as a merchant.
Steve and James, I mean, you've heard, I have to say, it's a great sales pitch for it. Are you seeing potentially other benefits that from your merchants you're talking to?
Yeah, I mean, I think we're only scratching the surface of where it can go. We're obviously testing or starting to look at testing with maybe some of the more obvious, kind of the subscription, the regular payments, those kind of things. But I think as the industry starts to embrace it and as we start to test new use cases, it will definitely take open banking into very new territory. A lot of the initial kind of testing is really optimizing use cases that already had a high propensity for open banking. So subscriptions, regular payments, those kind of things were already tended to be used, particularly in kind of the billing type use cases. Where I think you'll start to see is this is the key enabler to start to move into broader e-commerce, into broader kind of frictionless payment use case, and that for me is really exciting. And the key step to turning kind of open banking from something that is nice and really interesting to a material player.
And the use cases varied, or I mean, you're saying that big, but are you talking to merchants now about a huge variety of use cases out there?
Yeah, I think that those as I said, it will start, and the ones that you're typically seeing at the moment, the kind of where it will start is the use cases that open banking plays in today. So we've all seen the credit card companies moving over to start using it, for example, and it will start to take out friction and make their journeys better. But the use cases that aren't really using open banking today, you know, for example, the platform players, the marketplaces, those kind of things, they're prime for a VRP type experience. And we know from talking to a number of them, they're looking at open banking and going, that's the point that we'll start to play.
I think that. That's the point. Oh, sorry, go on.
I think the other use case I've heard discussed a lot is kind of that investment in long-term savings space and how you kind of start to have a far slicker experience for consumers to save and put money aside.
It's interesting you said that is the point that the merchant becomes really interested. That is the point where the merchant says, oh, I can start to see real interest. So my logical question now to Mike is, what's taking so long? Because are we missing the regulator just enforcing it? There's only these guys here live with commercial today. You know, What needs to happen? Why?
I think there's often a fair charge or challenge that stuff in payments takes too long, and I think that's fair. But at the end of the day, we are playing with systemically important payment systems, and we are doing things that, if we get wrong, would destroy trust and confidence in people making payments. So I think being a level of caution is important. But I would just say, look how far we have come. If you're Generation Z or Millennial, you would find it incredulous that not too long ago you had to write a check and go to your branch to switch money between your two bank accounts. You then got open banking, and it allowed you to digitize that experience. And it wasn't till 2008 we had faster payments when you could swap money between two accounts. So, we've changed the whole way that people make transactions. And if you look at what we've achieved through that, the next logical step, for which we've really scratched the surface, is open banking and me-to-me payments. And I think what we've done here is, if I use all the tools I have today, I've still got to think about sweeping money to another bank account, to miss an overdraft free, to get a decent interest rate, to top up a pension fund. And what I can now do is set parameters to allow that happen in the background. So I can let my bank, I can let my fintech provider, let my PSP just worry about my money, because I've given them the parameters. So, David, we're at the cusp of this. We've come a long way, and there's a long way to go, but we're starting to get to the point where...
But these guys are live with commercial APIs on VRP. Why is everyone else not? Why are they so far ahead?
I think if I think about what's
They're
happened...
a big bank?
Yeah, I'd say two things. Firstly, and this is a personal view, in terms of the me-to-me payments, a small subset of banks in the UK were compelled to do something, and it sort of felt like they were being brought to the table, made to open their accounts and let that money flow through. So I think there was a compulsion, and I'd much rather people come to the marketplace and serve their customers well than being compelled to do it. And secondly, I think perhaps some of the relationships presently it's an unequal relationship through that chain. I think we need to think about the equality of the various stakeholders.
Just to add to what Mike said, from a NatWest point of view, we actually looked at this strategically back in 2017 and decided there was more potential upside from open banking and data sharing than there was downside. So even though we had a regulatory set of requirements to deliver, we've always seen this as an opportunity. And if you want to compete in the digital world, you have to be data savvy, API savvy, etc. And to your point about the regulators, people probably not be aware, but the regulators published a report yesterday for the next phase of open banking roadmap. And one of the clear themes and priorities for them is actually establishing VRP as a kind of payment mechanism in the UK market.
So, Mike, when do you want it in?
Well, I think that, we've seen how much and how quickly an enlightened bank can move forward, and we've seen how quickly merchants have responded to that. That should be an encouragement to a lot of people. I think we need to do it carefully. We need to think about having a custodian for this, to establish it, to do it well and do it right. And I think that if those taking a first mover advantage in this need to think about how they're wrapped back into a holistic approach. But, why can't we see something coming? If you look at JROC, there's some timeframes there, 2024, 2025. 2025 seems a bit too far.
2028.
Some of those dates seem too far away, but let's do it, and let's do it properly. But it's about convincing folk that actually there's a real customer need here.
But, Mr. Mann, when do you want it in?
It's in. We've got it. We're piloting it now. We've got our first handful of consents set up. If you want to go to the Williams website, I'll give you the address later if you want to find me, and sign up for an account, providing you're a trade plumber.
We've got a room full in here, mate. A room full, trust me.
No, and I think to partially answer that, my take on that is that you're right, this is systemic. This is something that is very, very big, not just for the banks themselves, but also for merchants. If we're trying to persuade customers to change their behaviour, they've had 50 years of establishing a habit with cards. And if we're trying to persuade them to change that, even if the products were here right now, even if the banks were all signed up, we wouldn't get that change overnight. I'm quite happy to have a limited scope period of time to do it in real life with real customers, not me modelling it, but to try that for a year or however long it's going to take, so that we can refine that process as well. This is a partially unknown journey. Do I know if John Smith Plumbers of Surbiton is really going to take to this, or if they're going to reject it completely and we need to go back to the drawing board and start our journey again? I don't know at the moment. So I'm very comfortable with the idea that this is something that I can point to in 2 years' time and go, we started that in 2022, 23, and now look where we are. That's exactly what's happened with single immediate payments in open banking. We started that in end of 21 with Payit, and we're seeing huge increases in uptake in that. And if the same trajectory happens for VRP,
You'll be happy.
Very happy indeed. Yeah.
So maybe my real question to you should be, and we'll come back to the rest of the panel for an answer on this, is it morally or ethically right for you to be promoting such a service when compared to many card methods, it could be argued that they have Section 75 and they have various other bits of protection. There's obviously no scheme fighting for the consumer on these if they go wrong. Are you right to be promoting these basically to save you money when you could argue saving money for you, but less protection for them? As you said, they're almost consumers, really, even in your B2B2C type environment. They're almost a consumer type sole trader person. Is it really fair? Because they don't understand the intricacies of this, but they know that when they spend on card, they get some protection often.
I think it's a very fair comment, and it's something we've talked to various providers about in terms of what merchants will be asked to pay for a service like VRP. We have my particular business has I would say, even amongst our own industry, a fairly unrivaled reputation for customer service. And
but not everyone's going to be as good to you.
No. So what I'm saying is, if there is, we've talked about this in the past, if there is a mechanism whereby either a merchant is rated for something to say, okay, well, actually, you are a low-risk merchant, therefore we're not going to require you to, I don't know, whatever the process is, take out insurance, pay this extra fee, whatever the risk mitigation needs to be. I'd be far happier with that than a one-size-fits-all that we have with cards at the moment, which is where I'm fundamentally subsidising the travel industry. Because if you look at the ratio of things that go wrong in different industries...
I like that. You're subsidising the travel industry. The plumbers of this world are subsidising the travel industry. That's got to be a quote. Alexi?
But to back up that point, I do think in the cards world, was it something like 80, 90% of all bankruptcies in the cards world are travel related plus?
What you're really saying is the challenge is going to be is actually having a multi-fit model as opposed to I understand where you're coming from. The card world is one size fits all, and therefore you're subsidising, shall we say, a sector. The challenge would be if you had some sort of scheme on this, it would be one size. You need some sort of flexibility so that you can be, who do look after your customers and everything else, effectively treated differently from maybe people who are less good at doing it. Go on.
Yeah, David, you sort of position this question sort of around the morality and the ethical side. I think that if I look,
question.
Yeah, no, it's a good question, but I think the way I'd look at it is that you've got, unless there is a clear definition of where liability sits, unless there is some appropriate consumer protection here, we will not see commercial VRPs flourish. And we can look back to direct debit. I built the traffic up to 6 billion transactions a year. I would never have been able to do that had not my predecessors thought about the direct debit guarantee. Now, I'm not an advocate for that guarantee in terms of VRPs, but it was the thing that drove that trust and confidence and an understanding of liability from the outset. And that was the magic in the growth. And I think if we're talking about me, it's different. I'm just swapping money between my account in place A through to B. But when we're talking about commercial VRPs, we need to define the liability, we need to understand the protection, communicate it clearly, and if it's appropriate, then we'll see VRPs flourish at that commercial level.
I'd answer the question in two ways, first of all. Firstly, you've got to look at the balance between protection and control. So that the payment types that typically get, or we expect to get disrupted here, direct debits, card on file, they put all of the control in the hands of the merchant, right? So actually, I think there's if there was such thing as a moral obligation or whatever here, actually passing some of that control back to the end user and saying, actually, you can set parameters now of what you're going to allow that merchant or to take. I think that's a fantastic step in the right direction, and it allows the individual, whether it's a consumer or a small plumber, to sit there and go, well, what's my appetite for allowing this individual organisation to take money from my account? Whereas when they sign up for these other products, they don't get to set that. And then the other bit I think is worth mentioning is, yes, there is not industry consensus, there is no scheme or whatever here, but the idea that there is no consumer protection or no understanding or liability, when actually, if you take the case of NatWest, which is the only one providers in the market, this is a commercial arrangement. So they are sitting there and saying to PISPs, if you want to sign up for this product, this is the protection or the liability that you have to be willing to take. Now, NatWest has shared that, and it's made its view kind of clear, but that's effectively a mandate set by the NatWest Retail Bank that says this is the deal that we're willing to go with, that does provide that in you and does put some obligations on how this product is used.
And I think that's really helpful and really useful. But I think, and it's a way of communicating that to the end user to give them the trust and confidence that when they agree to enter into that type of arrangement, that they know what they're putting themselves into. They understand the parameters, they understand the liability, they understand the protection. And also, we mustn't expect the average plumber or the average greengrocer to be a banker or a payments expert. So we need to make this accessible and easy to do.
Okay, so picking up on that point, over the next 12 to 18 months, I get you as a fall back here in 12 months' time. Where am I going to be in terms of commercial VRPs? Will regulators have mandated it, or JROC have found a way of pushing it through that way, or are we just going to have a number of bilateral agreements in the marketplace? What do we think in the next... Forget 5 years away. In the next 12 to 18 months, this man on the end here would like to be doing, in the next 12, 18 months, a lot more business on this. Is he going to be able to do it in the next 12 to 18 months? And is it going to have to be bilaterals or a mandated regulatory structure? What do you think is going to be happening over the next 12, 18 months that's going to give this guy sitting at the end here, as a businessman, what he needs to run his business?
I think you are going to have a kind of industry framework agreement for commercial VRP. That's going to be supported by the regulators, but you're not going to see a regulatory mandate for it. One of the first priorities of the JROC piece is actually to address customer protection and that kind of dispute process. Because you're spot on, Mike, that is a barrier. And many banks are saying they don't want to do commercial VRP until that's established and that's consistent across the market. And that will happen, but you're not going to see a card scheme. It's going to be more like an ideal Netherlands approach than reinventing Visa and MasterCard.
How long, though? 12, 18? What am I...
For MVP1, it's going to be 12 to 18 months. Okay. But it will be a series of iterations thereon.
We're not going to see the regulator direct within that time period, but what we've seen is a regulator set an expectation in terms of the JROC, and if we don't deliver out against that report, then we should expect regulatory intervention. So I think the challenge is laid down through JROC to do that, and I think I've got one ask, whether it's NatWest, whether it's anyone else taking a first advantage here, just be ready to wrap it back into a holistic schema or custodian later on, otherwise it's going to be a real mess for customers and for merchants.
Mike? Excites you with what you're hearing or worries you because it's not moving fast enough for you? The next 12, 18 months, what would you really like to see here?
This feels, and it has felt for the last few months, I think, since VRP's really started to generate a lot of grown-up talk, if you like, rather than speculation, that this feels to me like that, from a... Can we get this implemented? Yes, we absolutely can. Will it be painful to get possibly initially some bilateral agreements in place to test that model and then go, okay, which of those do we prefer? Is that we've now got a framework we can work with? From a timescale point of view, it will take as long as it takes, and I shouldn't be as patient as I am being about this, but because the advantages to this are so long term and so widespread, it is worth doing properly and waiting for. Because if this dies on its arse because people are not prepared to work collaboratively together on it, it will be a great shame.
Thank you very much.